Good afternoon, everybody, and welcome to this edition of our live market analysis covering indices, crypto, foreign exchange, commodities, not in any particular order, of course. My name is Carl Copeling. I'm the market analyst over here at ThinkMarkets Australia, and it is a pleasure to be with you as we really delve into some of these other markets you probably haven't traded already, but in which there are so many opportunities. Let us first just do some of the housework, which says that you can find the Q&A window somewhere there on your Zoom session. That's probably the best way to do it. It's where my attention tends to be focused on the question and answer window here. But if you're also streaming, let me just make sure that's activated as well. Anything in that sphere of indices, commodities, foreign exchange and crypto, ask me about. I'll give you my best technical and fundamental, where possible, reader. Let's head over first to the charts. And I just happen to be here on my Amy Broker charts. It's not affiliated with anyone or anything. It's a one-off license. The only reason why I use it is, well, I've used it for a very long time, and it allows me to program in all of my trading systems and do the scans. But the Think Trader web and mobile apps are brilliant. They'll do anything you need to do in technical analysis. There is a reason, obviously. I need some of these more sophisticated features. So getting that out of the way, that's what we're looking at. We just happen to be looking at Chicago wheat at the moment. Not a great trend there, both in the short term and long term. You can trade wheat with us using a CFD at ThinkMarkets. I can't see any reason why you wouldn't be looking to enter shorts on this one, because if it does break beneath that low there, let me give you the number at 712.5. There's really not a lot holding this up. We'd have to go out to the weekly chart actually to have a look at for other levels downstairs, and probably not until we get all the way out to, well, there's a couple levels. Well, that's part of it, isn't it? That's the level we're trying to hold or break. And then there's another level just below 700. Fairly fluid on the way up, which usually means fairly fluid on the way down. Probably that's your ultimate target there, around that 610 to 620 zone. But geez, even on the weekly chart, that is looking absolutely terrible. Lower peaks, lower troughs, candles very bearish, completely rejected this zone here through 800 with some nasty candles. So a very interesting one to kick us off. Look, it just happened to be the last one on the list as I scrolled down my list before we started the session. Now, for everybody who's here today, we do have a really good turnout for what I know will be a growing interest in this live market analysis. But if you could pop in some questions, that would be great. Some commodities, cryptos, indices, or foreign exchange you might be interested in, and we'll get to those. While we're doing that, of course, I can head over here to the Think Trader web platform. This is I think this is the best way to access it. I know a lot of people are very keen on using their phones at the moment, of phone apps, but I prefer to do it the old-fashioned way and use the desktop. So we can go here, we click on wheat. It just happens to be on my watch list, and we're seeing almost exactly the same chart as we saw before, with almost exactly the same prices. And I talked about last week how to sort of understand how the trade size works on this platform, and really any platform. It's going to be very similar. And we should, I should just say, Khan has just introduced himself as well. He's in the chat window. Khan, can you just make sure that all the sound and all the vision's working as well for me, please? That'd be great. You can chat to Khan. He'll answer all your questions on the platform as well. Let's have a look at wheat. Let's say we were thinking of doing a short trade. I'm not suggesting you have to do this, but it's just getting familiar with the concepts, and that will help you get into it. AV, all good, says Michael. Okay, so we've got an amount here which we can change. As we change that, you can see the pip cost change. Let's keep things nice and small. This is in your local currency, right? So if you've opened an account in Australian dollars, that'll be in Australian dollars. If you've opened it in US dollars, that'll be in US dollars. But because my account here is denominated in Aussie dollars, that is 100% an Aussie dollar pip cost there. So we need to know what the pip is, because we've got 753.6. And look, you might know what the pip is. Hooray for you. If you don't, the way I find out, okay, I mean, hey, I've never traded wheat before. I'm coming at this with new eyes, trying to learn. Okay, so what I do is I turn on my take profit and stop loss orders, and then I can start to play around with this. I can see if I'm going to buy, and it's only red because the buy price has fallen, not for any other reason. 753.4. If I type in 753, you have to type the whole thing in, 754.4, I can see that the pip is actually referring to this digit here before the decimal point. Okay, so if we go from 753.4 to 754.4, my profit, if I go long, to hit the buy button first, that is, I'm going to make $1.46. Okay, and as this goes up, 755.4, you can see we're doubling that, and so on and so forth. So we've identified which digit is the pip, and also based upon this amount, now we see as I change this, that will change as well, what my exposure is. And what I can start to do now is go to the chart, whether I do it here or, what I'm going to do, I'm going to flick back over to here. Start to work out my trade parameters. Okay, so if I feel that this area over here is going to be a supply zone, right, because we've got a nice point of supply over here. So we go POS and POS. All right, we know that this is a point of supply. If I'm going to go short on this, so the goal is to go short, all right, which means going short, you want the price to go down. We are going to make money, so this is obviously we're going to make a profit down here. All right, let me just move that arrow because I will adjust it. So let's say we're literally getting in at the current market price. So our profit is the red arrow, is if the red arrow occurs. Let's change that arrow so we associate green with making a profit, and then the loss, which we'll associate with the red arrow, will be any movement in this direction. Okay, so let's go loss in here. Okay, now if we are going short, preferably we would like to put our stop loss. Okay, so the question becomes, where does our stop loss go? Okay, and preferably if we're going short, we want to set our stop loss above a few points of supply. Why? Why would you want to set your stop loss on a short trade above points of supply? Well, supply is where, or excess supply, we should say, is where the market is likely to, points of excess supply is where the market is likely to move back down again. If there was supply there in the past, there's a very good chance there's supply there in the future. All right. So remember, if the price goes up, we're going to lose money. If we can find a level where the price is being prevented from going up, that's a good thing. Okay, we want to put our stop loss on the other side of that. These points of supply will provide, hopefully, an invisible barrier that will protect our stop loss. But I can see another little area just in here. So just see these little shadows in here. Okay, and any of these black candles they all represent supply as it is. So there's a couple of ways you could do it, and that's only assuming you're going in right now. Okay, and I'll talk about another scenario in a second. You could put, and let me put my stop loss, let's make it a different color. Let's go orange here. That's represented by this line. Let's say we could put our stop loss here. That's one possibility, or we could put our stop loss just above these highs, and we'll talk about how high above these highs in a second. Okay, so let's call this stop loss option 1, and this will be stop loss option 2. Okay. So let's get stop loss option 1. Let's say that high there is 773.25. That high there, so 773.25. So let me just write that down so I don't forget it. So stop loss option 2, 773.25. Okay. Now what I like to do, and this is up to you. You can. There's a couple of ways you can do it. You can see this average true range down here, and what people will often do is they'll work this out over a period. So they might go 14 days. That's the standard, or they might go a month. That's something I've used in the past, and they'll add whatever that average true range or a multiple of that to this price and say, well, we really shouldn't move the average sort of way this thing trades in a day above that point of supply, and therefore that's where I should be getting out. Okay, now I don't have that indicator on here. Another way to do it is simply a percentage. You might say, I'll add 1% to that, or I'll add 2% to that. For a stock or a commodity that is very volatile, 1 or 2% might seem very little. For commodities that aren't very volatile, 1 or 2% might be a great deal. So this is where this idea of this average true range comes into play. And it's not looking at percentages, it's looking at in terms of, I guess, dollars or cents or absolute move. what is the natural volatility. So I do like that. I don't have the indicator on just at this moment, but let us just pick a number. And let's say the average true range was give or take 10. Okay, keep the number round. So we could then put our stop loss, we literally just go, plus 10, which equals a potential stop loss at 783.25. Okay. And you would do the same for this other level here, that point of supply there, the high is, and if you're not sure, you can always look over here, high 799, big round number, 800, of course. We know how important round numbers are, and then we've got 797.5. So again, you might go the average range, let's call it 10, above the 800 round number. I wouldn't use 799, that's just silly. So we'd go our stop loss for option 1 equals, let's call it 8, 10, and we might just go a little bit above 10, just go 25. Okay, so we've got a couple of options here, and then we can literally just go back to our platform and start to see, well, if I take this trade, what is it going to cost me? And I should also be working out a profit. Now, I know I'm just using this as a case study. I'm not saying this is where you get in, because you've got to deal with this demand level here. So don't get too excited. And for everybody who's listening who's already put the trade on, by the way, okay, calm down, all right? Slow your roll. Okay, we're not up to that point yet, because we don't know what's going to happen here. We might see some demand. We might get a better entry point. What we might see, you know, I'm going to draw my peaks and troughs here. We might see a little something like this before we move down. And what that could do is give us another point of supply that's even closer to set our stop loss above. Okay, we don't know yet, but we could get some demand in here, because in the past, clearly, straight out, that has been a point of demand in the past. Okay, why can't it then act as a point of demand? It is an area where investors, traders thought, you know what, that 720 is cheap and I'm going to buy it. And there was enough demand to overwhelm the supply that we knew was in the system. Okay, so it might happen again. And this is the thing, the dynamics of your stop loss, your target, your entries will change as the price action changes. So don't be afraid to just wait for a bit more price action to get maybe even a better entry or a better stop loss. Okay, I think we need to take out that point of demand before we can start to think about where the next target might be. And as I said, it's fairly fluid on the way up, so they can be fairly fluid on the way down. I'm not sure this one's going to be such a big idea, and I do think maybe the ultimate target is down here at 620. And if that's the case, we'll then need to measure, based upon the stop loss we decide upon, what our reward to risk is. And this is kind of the final flourish in setting up our trade, our reward to risk. And I tell you what, I cannot, and this is not equal to 1 to 1 equals, personally, I don't take the trade. I need to see at least 1 to 1 reward to risk for me to take the trade. You might say, hey, Carl, shouldn't you have 2 to 1 or 3 to 1? Doesn't that mean there's more bang for your buck if you get it right? And I say, yeah, look, there's nothing wrong with that idea, but 1 to 1 is a starting point, because who's to say that it's going to stop at that demand point? It's just a perceived demand point based upon the past. So that past demand point might be 3 years ago. Market's forgotten about it, and it might just go straight through that. And then my actual trade ends up being 2 to 1 or 3. I don't know. So, but I do need to have at least 1 to 1, because why would you take a trade where you stand to lose more than you make? Okay, so that's my minimum criteria for that. Anyway, let's head back to the platform very quickly. I do have some questions coming through, and I'll get to those in a second. But let's just finish off on this idea of how to find a trade, how to work out where our stops and targets are, and then how to work out a reward to risk, and therefore whether we should take the trade or not. So we talked about this idea of, now we're clearly not buying this one, are we, on wheat? So we're going to click the sell button before we enter the trade. Now, market, limit, stop, look, let's assume that we're ready to go on this one. It's at the price we want to get in, so we'll keep that as market. If we wanted to set a price that the wheat would have to go up to for us to get in, that would be limit, and a stop order is an on stop order. It would have to go down beneath the price for us to get in, but let's just leave it as we're ready to go. Okay, let's make this as small as possible in terms of the amount, because we just, And we're going to take our profit at, what did we say? Let's go 625. If there's a point of demand at 620, I'm not going to try and get exactly 620. And there's a very good reason for that. Let me go back to the chart here. If we know there's demand coming in around this level, it's actually a little bit below 620, we know there's going to be an excess of demand in there. We know that the short sellers will be covering back there. Why are the short sellers covering back? They're buying back their shorts because they know there's going to be demand there from bargain hunters. So the short sellers are starting to buy. They're closing out the shorts. The bargain hunters are starting to buy all around there, all focused on that level. So let's not try and get this whole move. Let us be a little bit smarter than them where they're going to try, and let's add potentially an average true range to that target zone so that we're out. Before they start buying, we've already got our profit, okay? So let's say it's, well, I can tell you what it is. So if I hover on this, it'll say that the top value is 615, okay? And let's say it's 625 is going to be our target, okay? So let's go target equals 625 because we've added our average true range, which we assume to be 10, okay? Go back to our Think Trader platform here, and when I find it, it will appear. There we go. So we're going to go 625 is our target. And we can see that we need to put in a stop loss. And what do we say there? I said 810 was a possibility. Let's just use the biggest one, okay? And we can see that potentially to make $183.17, we're going to risk $87.56. It's always changing because the prices are always changing. So just think about that for a second. To make $183, we're risking $87. Does it beat our one-to-one criteria? It does. So that's all good for me there. I'm happy if we were to go on this one to take it. Could you go now? Look, I don't think that's the worst idea. I just think, as I said, this point of demand is creating some risk here on going right now. So we'll just keep an eye. We'll keep an eye on this. And hey, I didn't pick wheat for any reason. It literally was, if you look on my commodities list here, it's the last one. You're not looking at the right screen. Sorry about that. I'm saying if I scroll down, so this is where I've got my commodities watch list. To look over here and then look at the list. Before I started the session, I scrolled through the list, everyone, and that was the last one on the list. So therefore, by default, it was the first one. So there's no ulterior motive in me picking wheat. It's just a case study we can use. Okay. There's a bit more I'd like to see play out. So we can see here, if the risk is all the way up here, it's $83, but we could go for a tighter stop potentially here, or even if we get that next point of supply, we go for a tighter stop again. And by getting that tighter stop, what that does for us, I know I'm flicking around a bit, but what it does for us, it changes this reward to risk dynamic. So let's say we can get that down to 760, okay? Our risk now to enter here becomes really, really small for the same profit. So you can see why that's important to get that good area of supply to protect your stop on a short trade. Okay, let us leave that one there. I'll get to the questions now. I have a few here on the streaming services. For Marco, I'm not going to do Whitehaven because Whitehaven's a stock. We're talking about indices, commodities, foreign exchange and crypto in these sessions. In the Tuesday sessions, I'll look at ASX shares. But Bullsheet, B-U-L-L space S-H-E-E-T is asking for the NASDAQ. So I'll do that after I do Carlo's gold suggestion. So let us come out of here. But what we've done is, I think, some great groundwork for how to look at trading some of these, for most people, weird and wonderful things that they've never thought to trade. Let's head over to gold now. I know it's super popular. And if you look on my list here on the left-hand side, you can see I'm heading towards XAUUSD because XAU is the ticker for gold, and then USD, obviously, we're pricing gold in US dollars. I've got a couple of contracts here that I can use. There's that one there which doesn't have my scratchings, and if I head over to this window here, we'll get my scratchings on it. So let's do some analysis on gold. Last time we looked at it, we said we were bearish, okay? The last few weeks, we've been talking only in terms of bear terms for gold. We did notice a candle here. I did notice this candle on Monday. I said maybe you can push back into sort of 1860, 1880, but I think that's where the short-term trend will start to influence things and push down with black candles and or upper shadows. It didn't even get there. That's not a great sign. The fact that this white candle here, I'm talking about this one here, couldn't even facilitate a rally up to here, the dynamic trend zone, and then a fall, I think is really bearish. So all of the demand which I felt was likely to come in here, we can see, yes, there's demand there, but it's very weak, isn't it? It's very, very weak. So I don't think I need to change my view on gold. I'm still bearish on it. I think it can fall further. And if it does close below 1825, well, the next logical level is around this sort of 1780, 1777 zone. Okay. There is the long-term uptrend in the way, however, before we get there. But long story short, more bearish, far more bearish than I am bullish on that one. What would it take to get me bullish? Look, it'd have to close above that short-term trend zone at the very least. The trend zone would have to turn around. We'd have to see higher peaks and higher troughs. You know, I draw these all the time. We'd have to see this sort of stuff and some white candles with lower shadows come in. I think we're a long way away from that at this time. So it gives you a bit of scope, I guess, for understanding what you might want to do with some of your gold stocks at the moment, which, again, I've been pretty bearish on for the last few weeks. Now, while we're here, it's probably also worth looking at the USDX, because really, if you're looking at something like gold, you kind of have to understand what's happening with the US dollar. Okay, so we can see here the US dollar looking strong. Certainly the long-term trend is indeterminate. I mean, it's amber. Yes, we've broken beneath it, but then we're coming back to at least have another look at it. I do think this is going to bear out at some stage, and it might take a few weeks for this to play out, but I do think we're going to interact with this zone, and I do think it will provide important dynamic supply and resistance to this move back up. Okay, 105, 106, it's a level we've been talking about. If we do get there, that's going to hurt gold. It's going to hurt your other commodities. Okay, let's see how we go when we get there. I've said if we hit it with white candles, hey, my feeling, it's just a feeling that we're going to see a reversal here at some stage. We'll be wrong, and there's no reversal. And that's bad, I think, for all risk on assets. If this thing starts powering back up again into the high 100s. Okay, but if we do see the black candles and the upper shadows, then we could see a turnaround. That might help things like gold and a few of those other commodities that are ultimately denominated in US dollars. Okay, let's head over to the NASDAQ for bull sheet. And fascinating chart at the moment, I must admit. I was on the wrong side of this one. I have moved back to a far more neutral stance on my own personal US portfolio, by the way. Okay, so I just have to trade it as I see it, as much as I felt that this thing was turning the corner. And yeah, mea culpa, maybe I was a bit premature. I saw us break, but above this, obviously we changed to amber. I saw us, and this was it. It came back and it held, and I thought, here we go. Okay, we're testing, we're holding. In fact, it was on this little test and hold here on this candle that I got excited. I reckon that's the 8th of Feb. That is the 8th of Feb right there. 8th of Feb, 7th of Feb over there, and then it was the 8th of Feb over here. I got up on Ausbiz and I said, literally based upon this candle. So it is this candle here. That's the 7th of Feb candle, and on the 8th of Feb, check the tapes. I said the new bull market in US equities has begun, and to be fair, clearly a little bit premature. Not what I wanted to do. Just wanted to go back and show you what I was looking at, which was that. Okay, so break above the long-term trend zone, test and hold, I felt. Short-term trend, very good. Price action, exemplary in terms of peaks and troughs. Okay, so here, 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 and here. And we can see it definitely resembles what I call good price action, where we're seeing the last troughs coming in at or above the second from last peaks. And for me, it did something here with the great price action and the test and hold that it didn't do here. Okay, maybe it did a little bit there. I couldn't see the future. I didn't know that market was going to respond negatively to Jerome Powell comments that there are multiple interest rate rises coming and stronger economic data that came out subsequent to that. But, you know, it's not about apologies. It's about accepting that you can't see the future with technical analysis. You can only go on what you've got. I probably should have waited for a little bit more confirmation first. I thought I had it here, to be honest. I thought I had it here, but we can see that's not the case. Look, is the situation lost? I don't think it is, as long as we continue to stay above this area in here. Okay, so this is about 11,388 is that trough low. It's also, if we're closely beneath that, we're decisively now beneath the short-term uptrend, which is changed to amber itself, so that's neutral, and the long-term trend, obviously, we're beneath that as well. We were hoping it was going to offer dynamic support, and maybe that's not the case. Beneath that, you have to concede it's not looking good. And then there's not a lot really you can do until you get beneath here and then, start to say, well, we're going for a big next leg down, as in watch out below. Here's another level. Maybe don't panic until we get beneath that one. Okay, because there's a little bit in here. Let's see how we go. Long, short, neutral. I think you got the gist of what I'm saying. Neutral. I don't think we can make a definitive call one way or the other. And if you can, and you know what's going to happen next, then maybe I'll flick over to you and you can do the rest of the webinar. But thanks for that bullshit. Let's head over to Kim on the streaming services, and we're going to look at corn now. So let's head down my list of commodities. That's my watch list here. It's another reason why I do like Amy Broker. Again, it's not affiliated with any broker. I know broker's in the name, but it is just a standalone charting package, and it allows me to organize myself as a trader, the way I like to. So I'm going to go in here. We're going to go alphabetically. You can see I've got metals up the top. Obviously, nothing comes up because that's just a placeholder. You can see metals, and then we'll go down the list just so you know how things are working. Energy, you can see what's in there, and then we go to softs because corn is what we call a soft commodity / agricultural commodity, but softs covers typically your agriculturals and your livestock commodities as well. And there we go, corn. There's the continuous contract. Now, without going into the vagaries of futures trading, each commodity, like corn, will have a month associated with the futures contract. So the current month, let's say it's February, that is if the particular commodity trades in February, because often they have specific months they trade, and it might be quarterly, so it might be March, June, September. It might be bi-monthly, it might be February, April, June, etc. That's all a bit tricky for me. The great thing with ThinkMarkets and its commodities offerings, you don't have to worry about that, because what we cover, our CFDs cover the continuous contract, right? So what the continuous contract does, and these are made by the exchanges, they're not made by us. Okay, this data is coming from the exchange, is it staples together all of the front month contracts. So front month is the current month. If it's February, it's February. If there's no February contract, it's March, for example. Okay. And then as each one rolls off, it takes those prices and back adjusts them into one long continuous, there's that word, chart. So effectively, I can look back and see, looking at my monthly chart, what was the price of corn back in 1993. Okay, and it has relevance in terms of points of supply and points of demand to today. So if you're not looking at continuous back adjusted charts, you're kind of not able to do proper technical analysis, in my opinion. Okay, but the data costs money. That's a whole other kettle of fish. But yeah, look, the good news is with the ThinkTrader web app, you don't have to spend that money because we've got that contract in there. You just need to be happy doing your analysis in there. Okay. Let's look at the corn chart. I don't think there's a whole lot to do here, unfortunately, Kim, is there? It's really flat. I'd love to trade a break either way. Like, I'm happy to trade maybe a break through 700, 710 to the long side, or trade a break through sort of 650, 640 to the downside. But while we're stuck in the middle, I just can't see any reason to get involved. There's so little volatility here. I mean, what you could do, Kim, if you're this way inclined, is trade options on the futures. I know we're getting really, really complicated now. And you could say sell a call spread, say a 720, 740, if you wanted to be conservative, or a 700, 720 call spread. So that's called a bear call spread. And then simultaneously you could sell a bull put spread at say 660, 640. That's another strategy you could do. But again, you'd have to talk to your proper full-on commodities broker for that. And you're going to need thousands of dollars in an account to cover your margins. Again, ThinkMarkets, it's so simple. It's a contract for difference. We don't have to fuss with these things. We just say if it's going up or down, and it's sideways for me. So let's leave that one there. Look, we've done half an hour. I think that's a pretty good session. We're only obviously going to do this as a softly approach to get you into the swing of things. So if you have any questions, now's the time to put them in. Otherwise, we're going to do West Texas crude oil. From Karnas said he's got a client who wants to know about it, and then we will adjourn. Let me go not to that one. Let me go to this one because it's got all my scratchings on it. So West Texas crude oil. And you can ask me about any commodities. So you must have something. I know there's lots of people in here. Ashok, Barry, Brad, Carlo, Glenn, H, Hanelli, Helen, Ian, Jimmy, Lachlan, Mahal, Michael, Steve, and all my streamers. Surely there's some commodities you want me to do some analysis on. Okay, West Texas crude oil, super important, of course, for your Woodsides, your Santoses, your Karoons, and etc., etc. Not looking great. We talked about last week. It's still in trend. Downtrend very much still in place. It's stuck in a range. We'd see 83.34 to the upside. We'd see 70.08 to the downside. Not a lot to do, I think, in this range, unless you want to fade rallies. Use this terminology last week, this idea of fading rallies. So to fade means to trade in the opposite direction of a rally. Obviously is a rise in the price, but you're looking to do so at well-defined points of supply. And we've got well-defined points of supply here. 83.34, 82.66 is lower, and then 82.62 is lower again. So maybe the next move might be into the round number at 80, fading a rally into that. And I don't like to just sell at a level. I don't have to fade a rally by just selling at a particular point of supply. I want to see some evidence in there first. So I'll wait for the first black candle there, the first upper shadow before I do it. And the view is you're getting a better price within this trading range to benefit from a perceived breakdown, an eventual breakdown through 70, where the big move is really going to occur. Okay, that's how I'm looking at crude oil at the moment. Okay, I've woken people up. Carlo and Ashok have both asked for copper. Now, last time we looked at copper, it was starting to look very good. Okay, we had this candle here. In fact, I think it might have been around here, and yeah, we said, look, can't see any reason why it can't move back up to 436. It's making progress on that. There's nothing so sinister in the candle from last night. You can see that's last night's candle there, and this is the current one. It's too early, so I just discount that one. So even there, it's the current candle. Nothing too sinister to say that the short-term uptrend can't continue. It all looks fine. So if there was an alarm bell sounding there, I'd let you know and say, hey, it's time to panic on copper. And of course, that reflects back on your copper stocks, which let me tell you what they're doing today. Because since I told you, hey, don't stop bloody well trading copper stocks if you think copper's going to straight copper, they're mixed bag today. Eris is down, Sandfire's up a bit, 29 Metals is up a bit, and Copper Mountain's down. As I said, it's the vagaries of trading copper stocks. It's too hard, just trade copper. So that one looks fine to me, everybody. If you're unsure where to find some of the stuff we've talked about on the platform, you go search for instrument here, like this wheat, just start typing it in, and then you can just add it to your watch list. And I've already got the stuff I like to look at very regularly. There's the copper price there. And lo and behold, the chart looks exactly like it does on Amy Broker. This is the brilliance of this platform here. You've got all these charts, and they are already the continuous back-adjusted charts. So big tick there over many other platforms. There's your West Texas crude oil. And again, we're going through this process. Geez, that looks bad. It looks worse on this chart than the other chart. Same chart, of course. But potentially we're looking to short this one. I tend to go for the minimum. Like, you can just click down on that till it goes to the minimum, and it'll tell you what the minimum is, because you just can't go any lower. Obviously I can go higher, but I can't go lower. So it's saying the minimum I can do is 10. Don't ask why. You don't need to understand why. It just is. Okay. It's not, the amount is so irrelevant. This is the line here that counts. What does that amount mean to you in dollars and cents? And if you're doing 10 contracts, your pip cost is 15 cents. Well, what is a pip? Let's say we're shorting at 73.97. So let's type in here, and it's going to move around, 73.88 now. If we, well, there you go. That's $1.32. So the pip here is the 8. Yes, it is not the 8. That's look, the pip here is the fourth digit, by the way, but because we've got 10 contracts, not one, it's coming out as this. It's very subtle. Check the recording, but everything I said actually makes sense. It's because we can't make this to 1. Okay, that's why this is $1.17 for a 10 pip move. Okay, so the pip is the fourth one, not the third one. It will make sense because that's 10. But we can see, if it goes down 10 cents, we're going to make $1, give or take. Okay, let us flick back to here and say thank you for everybody who has participated today. Actually, I've got a few more. Look, let me suspend that. Let's go back here. I'm not going to leave you hanging. I'm happy to go for the full hour on this. I just didn't see that so many people had just typed stuff in after I gave you the bit of a jolt with the cattle prod. Okay, well done. USDHUF from Hanelli. Hey, Hanelli, pardon my French, but what the hell is the USDHUF? No, hi. I've been trading foreign exchange for near on 20 years. It's got to be the Hungarian, what's the Hungarian what? There it is, Hungarian Forint. I should have known that. Okay, honestly, in my many years of trading foreign exchange, I've never traded the Forint. Pardon me. So what we're looking at here is the US dollar against the Hungarian Forint. Okay, so if this is going up, the US dollar is getting stronger, and the good old Hungarian Forint is getting weaker. If it's heading down, the Forint's actually getting stronger. So we can actually see, how about this? The Forint has been appreciating against the US dollar, the mighty Forint. Can it go lower? Probably. As in, can the US dollar go lower here? Probably can. The US dollar is strengthening against everything else except for this. So I don't know what's going over there in Hungary, Hanelli, but something good's happening over there. Look, short-term trend's down. Long-term trend is changing to down. I would stick with this trend. And my brain's trying to contemplate the fact that the US dollar is looking so strong against so many of the majors. But I have to say this continues to look very weak here. Now, I'm going to guess that we don't have the Forint on our platform. So forgive me for not knowing or remembering what it was immediately. And forgive ThinkMarkets for not having the Forint on the platform. Khan will correct me if I'm wrong. But I'm always happy to do it. This one we might be more familiar with, which is the EURUSD, a little currency there from a little continent called Europe, versus the US dollar. And it makes sense that this is going down because the euro is the first in the pair. We're looking at its strength or weakness. And if you're ever unsure about how these match up, which one's first, which one's going up or down, just bring your mind back to the good old Aussie versus US dollar. Okay, we know AUD USD, when it's going up, our Aussie dollar's worth more. When it's going down, our Aussie dollar's worth less. So it's the same thing here for the euro. We're just replacing AUD with EUR. So we can see more recently it's heading down. We know the US dollar is strengthening against the majors. It's much like the Aussie dollar chart. Short-term downtrend, long-term trend was trying to turn up. I'm still pretty bearish on this because we said that the US dollar index can go a bit higher. So I think this one could go a bit lower, okay? How much lower? I don't know. I think we're going to see some sort of demand come in and around these levels. Okay, so let's just see what happens there. So if you're in the trade, you're short already. Yeah, I think that's the place to be, but probably taking some profits. I think in that zone around that low there. And I'll give you what that low is in a second. That low there, 104.82. Okay, and I don't think you want to be all out because if we crack through there, it's lights out, and it's lights out on a lot of global assets as well, right? So I think you want to keep some skin in the game, but looking to take a bit off the table because I just feel that the US dollar is going to peel off then, and we're going to get back into a bull market phase at some stage this year. January's move wasn't in vain. This one's from Brad. What does the cotton chart look like? Let's have a look at cotton. Good. We've got some great discussions coming now. So again, we're going to go back to our softs here. This is one you can trade again on ThinkMarkets. I think it looks really weak here. Some of it's going to be that strengthening US dollar, no doubt. Some of it's going to be what's going on in the copper market, which I'll admit to you, Brad, I've got no idea what's going on there, nor do I care, to be honest, because all I care about is what the chart's doing. And look, it's pretty decent demand here, a nice round number at 80. I think you can watch the shadows here, and if you start to see a few more shadows in here, you can almost just jump the gun a little and take a short trade to target this area down here at 70. And I think you've got a really well-defined area of supply up here to put your stops above, and we can get 1-to-1 on that. It's a bit of a cheeky trade, so probably for the more experienced commodities traders out there. But having said that, if you can get your risk down to, if you can get this down to, well, maybe I'm risking $15 on the trade to make $20, even if it's just in the interest of getting the hang of how these work, it's probably not such a bad thing ever. You might make $20 in the process. But if you lost 15, it wouldn't be the end of the world either, would it? You're just trying to get your hand in a little bit. Not to be flippant about it, I actually think there's a trade there. So I'm not just saying, hey, just trade for the sake of trading. I think there's a trade there. But, it's a tight one, isn't it? Okay, Brad is also asking about uranium, which we don't offer on the platform. I don't know any provider actually that offers uranium, and it looks very flat. There's not a lot of activity there. You can see volatility very low. This is the one which has my scratchings on it, so let's head to it. And even then, because you only get an afternoon fix, I have to go to a line chart to see what the trend is. The short-term trend is up, long-term trend is holding, but we want to see it close above 52.70 to see some upside volatility, a little bit of FOMO coming in. Very complex market, the uranium market. And then for Carlo, we've got lithium, and the last one I've actually answered bullsheets question there also. So we're going to do lithium, XJO, and then we will adjourn for the day. So let's head to the lithium contracts. Again, you can't trade these unless you've got a proper futures account. This one trades on COMEX, so there might be a US broker you could engage with to trade it. It does look like it's coming down, and I think almost finally we might have a close beneath that level there. It doesn't trade very much. It's very thin. It's very illiquid. Okay, doesn't trade all that much. Doesn't trade a lot. That low there, 73.75. What I'll do is just change this line here, paste that in. You can't see this window, but trust me, in what I'm doing, the results will be shown on screen. There you go. It hasn't got there, but it's very close. I think it's a slippery slope from there. It's going to be much like the coal breakdown, the Newcastle coal breakdown. So that was that one there. Okay, look familiar? And I know it's blasphemy. It is blasphemy, isn't it, to say that lithium could possibly go down. And you might say, Carl, that could also go up. Yeah, look, it could, but I'm looking at lithium carbonate, which has already broken down, and it's broken big time to the downside. Higher prices beget higher prices, everybody. You know the feeling when things are going up. It's all about FOMO, fear of missing out. Fear that you can't satisfy the demand from your customers for the batteries you're producing in China, and therefore you have to keep ordering raw materials. And then whatever happens, I don't know, COVID lockdowns, COVID startup, who knows, whatever, it just breaks, it just takes the steam out of it, and then FOMO goes, and it's like, well, the reality of it is there's plenty of supply coming out. Where's the supply coming from? From all the miners that are now going into production, and we just go, you know what, we're just not as desperate anymore, so we'll only accept a lower price. And because there's so much supply there, people go, yeah, okay, well, I'm digging out of the ground for this for a lot less than this, based upon a few years ago where the prices were and what I thought they were going to be. So I'm happy to take lower prices, and you get a break, and then it just the momentum just switches to the other side, and you get this sort of a move. So just be wary. I know I've been a bit of a Pandora, haven't I, on this for a while, and I was on this one also. But just be aware that as good as a story, and this is the most dangerous thing in trading, is a narrative, a good narrative. And lithium had a good narrative, coal had a good narrative, and good narratives are going to cause you to hold on much longer than the chart told you to get out. I don't like narratives. And this is why I say I don't like to know what stuff's doing. I just want to read the chart, because everybody who needs to know what stuff is doing, they're trading. They're part of demand. They're part of supply. They become the chart. And that's where I come in. That's probably a pretty... XJO, sorry, one more. I was going to say that's a good place to leave us today. Let's do the Aussie market. Look, why not? That's a line chart. No harm in looking at a line chart here. It is showing you there is definitely a rhythm, isn't there? It's like a cardiogram. And maybe we're coming back to 7,200 before this move is done. I do think we're going to find some support, and I think we're going to find higher levels throughout the year. And let us just therefore also go to the candlestick chart with my levels. And you can see, look, 72.57 is a possibility. I haven't updated that for today, but we're down a little. And then the next level there is just sub 7,200, where the long-term trend's coming in. But there's nothing in that chart to suggest to me that we can't keep going down for the next few sessions. There's not a lot to tell me where we're going to be in the next few months and few years, but for the next few sessions, look, clearly supply's in control. Don't fight it. I do think demand will come back in, much like it did here. Okay, much like it did here. I do think there's cash out there for this. And let's watch this level in here. Maybe you might get one there, but probably in here to see how it goes. All right. Look, I had lots of fun today. I really enjoyed that. And I really enjoy doing these Thursday sessions. So if you've got anybody that they don't have to be interested in trading indices, commodities, Forex, or crypto, they just need to be interested in trading. If you know someone, tell them about these sessions, get them along, expand their horizons, because there's plenty. We like to do plenty of education in here as well. That's obviously the link, but you know how to get there because you've already registered. If you're watching on any of the streaming services and you want to join me on the Zoom chat, that's the best way to do it as well, because I do just, in terms of the logistics tend to focus more on the Zoom chat window. If you're not a client of ThinkMarkets, well, you really should be, because as you saw, we've got this amazing platform. We've got all the products you could possibly want to trade, and we do your Aussie shares for your self-managed super fund. So just get all your stuff in one place with us. You've got your self-managed super fund, trading way over here, $8 flat rate commission, CHESS sponsored, so important that you are the beneficial owner of your shares, and with the great customer service. And then you've got your CFD trading going as well, where you can do your high grade copper. You can short cotton if you like. You can go long corn if it breaks out. You can short wheat. Just giving yourself some other opportunities. If like now, the Aussie market isn't doing a whole lot. We do have the best spreads. We've commission free on shares. That's going to save you a bunch of money as well. Award-winning broker. We're not a fly-by-night. We've been around for ages. We keep winning awards. Easy to use platform, as I've just shown you. Plenty of fail-safes in there to keep you safe. And you get a dedicated account manager. We don't hide our contact details like so many of our competitors with cheaper rates do. You can get in touch with us straight away, and we will fix your problem. Head to thinkmarkets.com/AU for more details. Hey, if you like what you're seeing and you're on the streaming channels, hit the subscribe button to stay notified of next time I do go live, and hit the thumbs up button, of course, very important to let us know you like what I'm doing, so I'll continue to do more of it. Apart from that, it's been such a pleasure chatting with you today. All the best for your trading and investing until we catch up again. But the disclaimer, very important, says that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of it, seek the help of a financial professional and consider it carefully. You can get more information about ThinkMarkets and what we do from our product disclosure statement, our PDS, which you can download from our website.